Hello, Arizona, and thank you for downloading this episode of Valley of the Sun Real Estate Show. I'm your host, Jayson Bates. I am once again joined by Awni Abbas of the Abbas Group and author of the book titled, I shouldn't say entitled, but titled, Your Guide, The Ultimate Guide to Central Phoenix Real Estate. How are you doing today, Awni?
Fantastic. Beautiful as always. How are you doing today, Jason?
Awesome, awesome, awesome. Well, I want to jump right into today's subject here, Ani, because this one is one that I think a lot of people just put, as I say it, the cart before the horse here a little bit. And, the one thing that you must have in order to purchase real estate in Arizona, and this is probably for the whole country, but that one thing is, drum roll please, pre-qualification letter or pre-approval letter, right?
So I need that, guys. I need that.
Yeah, absolutely. And Ani and I were talking here before, and we were going back and forth here on this, but he, as a realtor, looks at this pre-approval and pre-qualification, and I'm going to go into some detail about the difference between the two. But he has a different perspective on that and what it means for him and his buyers or his sellers. And so Ani's going to bring a unique perspective here to today's subject. So I'm really happy to have him as a part of this show today.
Great.
And I also, just so you know, the listeners out there, you can also check out a small little video that I do, a little small, explanation, if you will, of the pre-approval versus pre-qualification process, and I'll put a link in that in the show notes here. But thank you to all of you who have downloaded this episode, and certainly you can reach out to me by emailing the show at Valley of the Sun Real Estate Show, or you can call me directly at 602-573-3101. You can search me on iTunes, just hit Phoenix Real Estate, and I should pop up, or the show should pop up, and you can certainly subscribe to the show that way as well. And Ani, tell us how we can reach you so we can get in touch with you.
Definitely. The viewers could find me anywhere, really. We're really big on social media. You could contact me at 480-788-4118 or search Awni Abbas online, Facebook, Google+, LinkedIn, Instagram. I mean, we're everywhere. So you can connect with us online.
Absolutely. And that's the same with me. Twitter, whatever. You can connect with me any way you need to connect with me too. Jayson, Jayson Bates.
We are everywhere.
We are everywhere in the internet sphere. All right, cool. So let's get right into this here. So pre-approval versus pre-qualification. Now, most people don't understand the difference between the two, but there's a huge difference between the two. So a pre-qualification is going to be where I take an application with you, take down the necessary information, income, assets, residency history, whether you're paying rent, if you own a home, if you plan on selling, take down a full application, which for me, that takes about a 30-minute process, 30 to 45-minute process, depending on how much information you have and how detailed we need to get in that information. I'm also going to take a look at your credit report. And look at that credit report and see if there's any hurdles that we would need to overcome in that credit report for the pre-qualification, for the pre-approval. Excuse me, we're talking about pre-approval. So for the pre-approval. So it's going to take about a half hour. And then the other thing that I do with my pre-approvals anyway is I also run it through the automated underwriting engines. Super duper important there. Now that's not I'm going to say from a lender's perspective, the automated approval, and I have realtors who actually request a copy of the automated approval to accompany the pre-approval. So there's like two things there in some cases that I may have to send to your realtor. The automated approval, to be clear, is the DU, or desktop underwriting, or LP, which is loan prospector. Now, DU, desktop underwriting, or sometimes referred to as DO, desktop originator, is the Fannie Mae underwriting engine to help determine risk and whether or not Fannie Mae will purchase or securitize your loan. All lenders right now today are pretty much using the DO/DU findings. Now, there are overlays to those findings that take it another level, but within DU, or DO, excuse me, DO, and I know I'm going DU, DO, DU, DO, I'm confusing everybody here, but with DO, Desktop Originator, lenders have the ability within that underwriting engine to put their own overlays into that. So DU is a raw Fannie Mae approval. So let me say that again. So DO is the ability, gives the lender the ability to put overlays onto Fannie Mae's guidelines, and DU is raw Fannie Mae guidelines. So I use DU, which is the raw Fannie Mae guidelines, and there's a whole nother segment to that we can get into a little bit later. And then LP is Loan Prospector. That is Freddie Mac's version of DU or DO. Okay. Now, Fannie Mae is more asset driven. The more the assets, the deeper they'll go when it comes to credit profile and digging, and getting an approval. LP is a little more strict on credit without having the assets. So LP, though, is a little more flexible when it comes to VA. VA is generally run through LP, Loan Prospector, Freddie Mac. DO, DU, Fannie Mae is a little bit more strict when it comes to VA guidelines. So right now, as it stands right now at this moment, there's a lot of talk of them going back and forth, whether or not they should combine the programs. But right now, a lot of VA stuff is being originated through Freddie Mac. So that goes into what I do. I get the whole process, and I probably went a little bit too deep into that. I hope I didn't confuse everybody, but I try to get a full credit profile of a buyer on a pre-approval.
And Jayson, you're the one that knows where to submit, DO or DU, or LP. It's not like the borrower needs to tell you this. You know where to submit what type of loan to what area, right?
Right. Exactly. And good point there, Awni, because that's why you need a professional like myself, not somebody who's part-time loan officer, and a professional like Awni, because we understand, by looking at your application. I kind of really call that the interview process. So I go through that and get all the facts, and I want to know all the facts, because then it helps me determine on which direction we need to take your application. We need to go, through Freddie Mac, or if we need to go through Fannie Mae. And it's not just VA, and it's not just non-VA that determines that. There are other factors in there that are a lot more detailed, and they're really unique to everybody's situation. So I don't want to go into that because that'll be kind of boring. But the pre-approval process is basically a credit overview, if you will, of your profile. So it's not a full underwrite. Pre-approval is not a full underwrite. Now, on a pre-qualification is a full underwrite. It's gone through the underwriter at that point on a pre-qualification. Now, it would involve all the same steps as a pre-approval, but the pre-qualification would take it one step further, and an underwriter would actually look at your income documentation, your asset documentation, that sort of thing. Maybe your bankruptcy discharge paper, if you've had bankruptcy in the past, a foreclosure, whatever the case may be. The underwriter is going to take a look at that and make sure that it still fits within the Fannie Mae guidelines. So, but before you get to the pre-qualification process, you first got to do the pre-approval, and then from there, if there's a situation, a circumstantial situation, for example, that might be a little bit in the gray area, that's where I would take it to an underwriter to ensure that the underwriter knows exactly what's coming and what kind of steps we would need to take to ensure a smooth process for you.
Jayson, now I bet you anything buyers are going to question, okay, which one am I going to need for the agent to submit the offer? Do I need a pre-approval or pre-qualification? Because those are the kind of questions I get.
Yeah, and very, very good question. So In most cases, you just need the pre-approval. In most cases. Now, we just had Ani and I. We just had a buyer, Jenny, who was in one of these gray areas, and she had been turned down by several different lenders in the past. And I took a look at. I did the interview process, went through her whole application, asked her a lot of questions specific to her situation. And then, based on that information, I said, hey, I think we can put this deal together. As long as you can prove to me what you're telling me, then we can put this deal together. And so that's what we did. And I took that next step, and I went to pre-qualification. And I sent it to the underwriter before she went out and looked at homes. So now she was pretty anxious, as we all are. We all want to see the properties. That's the sexy part about real estate, is going out there and seeing the property and feeling it and smelling it and all that kind of stuff, and getting the vibe from it. And it was a bit, I know it can be a bit frustrating. It wasn't really for her. She was very understanding and wrote me some very, very lovely thank you notes after the fact, because at the end of the day, she's in the home, but we're doing a lot of the due diligence up front, which is super important. And this is why Ani and I felt that the need to get this out there for this one thing that you must have before you go out and look at real estate, because the last thing Ani and I want for you is to have disappointment. We don't want any disappointment when it comes to real estate. This is exciting. This is the American dream. So we want you to be excited, and we don't want you cussing us out, upset at us, because in the fourth quarter, all of a sudden you can't get the deal done because the due diligence wasn't done up front, because there was an oversight on the pre-approval process. And that happens a lot. I can't stress that enough, of some of the unprofessionalism out there from loan officers who just take it for granted when they run the DO or the DU, the Fannie Mae guidelines, and they see the automated approval, and then they say, okay, yeah, here's the pre-approval, go for it. And then Ani takes his time out of his day, drives you around, gets you on a property, and then we get to the underwriting, you get under contract, it gets to underwriting, and then it falls apart because there's some kind of issue on your credit report, or maybe your income, or maybe in your past, or something that came up that DO did not pick up on. DU, Fannie Mae. Okay, so very important that that all the due diligence is done up front, and you as a consumer, you tell your loan officer exactly everything you possibly can when it comes to your profile and your credit profile.
Exactly, and I think, some people are embarrassed. If they have bad credit, they may be embarrassed, but please be honest with every single thing. Every little number and situation counts with your pre-approval.
Yeah, absolutely. I mean, tell me everything. Don't be embarrassed. There's nothing you can tell me that I haven't already seen or haven't already heard. Absolutely nothing. So now that's from the lender's perspective. So pre-approval, just to kind of recap here, pre-approval goes up to the point of it getting submitted to underwriting. Does not go to the underwriter. So I take a little bit for granted that when you say you make $10 an hour or $20 an hour, that you can provide a pay stub to reflect that. And there now, if you're self-employed, let me jump back here a little bit, because that's the easy part. Is if you're W-2'd employee, it's pretty cut and dry what you make. But if you're self-employed, I will never issue a pre-approval until I see your tax returns. Period. I won't do it. And that's only for your protection, for Awni's protection, and for the seller's protection. Because inevitably, if you're self-employed, you say that you make $100,000 a year, but then you only claim to the IRS you make $20,000 a year. Well, I can only use, for qualification purposes, I can only use that $20,000 a year for income. And so that dramatically impacts your purchasing power. And so we got to keep that in mind.
That's a great one to bring up, Jason, because I think a lot of self-employed borrowers just don't know about that. So, right. Good one to bring up.
Yeah, and I just saw, what was it, Friday or something like that. Arizona is like number 2 or number 3 in the country for self-employed people.
Oh yeah.
And California is number 1. California is number 1. Arizona is like number 2. And I think that goes hand in hand with just the outdoors, right? I mean, we've got a lot of landscapers and contractors and things like that. So it goes kind of hand in hand, I think, with what we are as far as tourism and all that kind of stuff. I think it just kind of goes hand in hand.
I agree.
So if you're self-employed, remember I'm gonna need 2 years tax returns, and I'm gonna need to average those 2 years before I can issue that pre-approval and that pre-qualification. So again, the pre-approval is just up to the underwriter, and then after that, it's going to be pre-qualification if I feel that there's some kind of gray area that we need to overcome, some hurdle, the FHA Back to Work program. Maybe you're asking for some type of an exception to the waiting periods in order to purchase. Maybe there's some kind of quirkiness to your income. Maybe you were self-employed, now you're not, or maybe you weren't self-employed and now you are. I've got tons of examples. I've helped people who have been less than 2 years self-employed and getting them approved, but I always get them to the underwriter first and foremost, or get it through the underwriter first and foremost before I issue that pre-approval. So.
Now, Jason, how about mentioning who the underwriter is? When you say underwriter, I'm sure buyers are saying, well, who's that?
Yeah, exactly. Well, that's a good point. Good point. So underwriters are going to be individuals who work for my company or the company I work for, and they're there to help evaluate the risk in extending credit to you to ensure that it can be securitized on the secondary market and sold to Fannie Mae, Freddie Mac. Okay, so the underwriter is there to interpret that risk. And underwriting is kind of a quirky little thing here, right? And this is where I've run into this several different times, especially as being a turnaround lender. So when somebody comes to me and they say, hey, I've been turned down, right? And this happened with Jenny, the client I spoke of earlier. She came to me and said, well, wait a minute here, Jason. I've been turned down like 2-3 times. What makes you so different? Why can you help me out where those other ones couldn't? If we're going to follow the Fannie Mae guidelines, what's the difference? Fannie Mae is Fannie Mae. And it was a great question. And the difference is that there are interpretations of risk, and there are different levels within each organization to which Fannie Mae, Freddie Mac allow those organizations to extend credit. Those are overlays. So, for example, a lot of lenders have a 640, maybe a 620 credit score when it comes to FHA. You need to have that credit score, and it's all about this credit score, right? Well, the FHA guidelines are that really you don't need any credit score to get an FHA loan. Those FICO scores, and companies have done a masterful job of saying, hey, these are the guidelines. Well, they're guidelines for them, but they're not necessarily guidelines to FHA or HUD. So that's where it takes somebody like myself to help guide you through those areas, and why I align myself with organizations that don't have those overlays. So if I can't help you, I truly believe that nobody can help you, period. Because I don't have those overlays and I don't have those restrictions. I get a lot of people, my son works at the credit union, right? He just told me of a story yesterday of a borrower who has a 750 FICO score, but her revolving credit is at 90% usage.
Oh, wow.
Okay, and she only has 3 credit cards. 3 credit cards, and they're at 90% usage. The credit union turned her down. Turned her down for a loan. She went out and got a cosigner. The cosigner had an 820 credit score. Still turned her down for the loan. So that is their overlay or their interpretation of risk. They feel that if you have a high usage of revolving credit, that lends to the possibility that you may be a high credit risk. Where I don't have that restriction. I don't have those kind of restrictions. I don't have those interpretations of risk. And so my net, if you will, is a lot bigger to help people like yourselves get into homes. So if you're having troubles, or you think that you just don't qualify, or you don't think that you have what it takes to qualify, please give me a call. Let me help you, walk you through that, and let me help you get that pre-qualification or that pre-approval. Because I can tell you exactly where you're at today, and if you're not there today, I can certainly tell you where you need to be and how long it's going to take for you to get there. which I think is important. If you have a goal as a consumer, and you want to buy a house, but you just don't know where to start, and you're a little bit afraid, like Ani said, about exposing yourself credit-wise out there, then that's what I'm here for. I'm here to help you and walk you through that process. So with that there, I'm going to get off my little bit of a bandwagon there on that, Ani, but I want to hear from you on a real estate perspective, from a realtor's perspective. I want to hear from you about the pre-approval and the pre-qualification. What does it mean from you from the buyer side and from the seller side?
Right, right. Okay, so it's and I'm going to keep this as simple as possible. It's the truth. I mean, as a buyer's agent, we absolutely need that pre-qualification form. In order for us to submit any sort of offer to the listing agent for their client, we must submit some sort of pre-qual or proof of funds. If you're a cash buyer, I need the proof of funds to show that you can purchase that property. If you are a loan buyer, I need to see that pre-qualification letter and submit it with the contract. Now, I go a little one step further. I don't just simply look at the pre-qual letter and call it a day. What I do is connect and see well, especially on the listing side, but let's talk about the buyer side, because Jayson's phenomenal. What you do, Jayson, is phenomenal. I mean, you have revived deals that have died and people who have not been able to obtain loans. So I like to give that option to buyers. Hey, give Jayson a call. He can go assess everything for you and see if he can get you qualified. So once we have that, beautiful. I know that Jayson could do the deal. So I have that trust in him. All right, he gives me the pre-qual. I submit the contract with that pre-qualification. Now, sometimes the agents may contact Jayson just to see how strong the profile of that buyer is. Totally fine. Now, so please, I do need that pre-qualification letter. So even if I were to set you up on a search with a list of homes, and you're looking and looking and looking, I need to know what price point you are qualified for. So when you ask me to set yourself on a search, I don't know what price point to be looking for. I don't know if you're qualified up to 100,000, 200,000, 500,000. I don't know. So I do need to direct you to the lender to get your ducks in a row. I actually made a video about this too. Buyers, get your ducks in a row. You need to get your pre-qualification first, the letter, and then I can submit that offer. I am then at ease, as well as yourself. Then we could go out looking at homes all day. Now, on the listing side, we have listings, and when we receive an offer, we always ask for that pre-qualification form. We do. But I do go a little step further. I actually analyze. When it's a different lender outside of Jayson, I don't know that lender's capabilities. I may have never spoken with them. I may have never communicated. I don't know what their levels of communication are or how their experience is with loans. So I take a look at the pre-qual and I absolutely give them a phone call. I need to know how strong this buyer's qualification is and if they've actually ran DU or LP on the buyer. If I feel sort of uncomfortable with the situation, I will request, like Jayson said, the DU findings on that buyer, because I need to see if they can truly qualify for that financing. Because the worst case is you submit your offer, you're spending money on your home inspections, your appraisals, and then all of a sudden the deal dies and the loan is not qualified. That is a huge disappointment for all parties. So it's truly important. It's the number one thing that everybody needs to do is get their ducks in a row, get their qualification done first before we even go look at properties. The best thing I'm going to do for you is put you on a search, but we're not going to go out looking until I have that letter in hand. And that goes for our agents as well. It would be a waste of time. I'm sorry, that's going to be a waste of time for you and I. There will be disappointments, frustrations. It's just not the right process. So we want to commit to the right process for you so that we have a smoother transaction throughout from A to Z, and then you get the keys to your house.
Yeah, absolutely. And one thing too, I wanna point out here, because this is, I think, important too, is that when I send out those DU findings, there is information on there that is private. Okay, so that information is not disclosed to a listing agent if they
Yeah.
ask that of me. And I don't send those out unless I get permission from you as a consumer to send them out or send it out. Um, so I'm here to help you get into a home, and I certainly could send the pre-approval or the DU findings. I could send them to you as the consumer, and then you can give them to your realtor, and then elect to attach that with your offer letter. And that was really something that was really popular when demand was really high for properties here in Phoenix, because they wanted to separate themselves from other people, not just say, here's a pre-approval, but here's a pre-approval and here's proof to back up this pre-approval why I'm pre-approved. And that's what those DU findings do for us. So DU findings are very, very powerful, but even still, in the DU findings, it still has to be analyzed. When I talk to Fannie Mae, they always tell me, hey, Jason, the DU findings, they're a recommendation, they're not an approval. So it still has to go through underwriting. It still has to go through its checks and balances. But DU is powerful in that it does read your credit report to a degree, not the complete credit report, because, for instance, for example, if you have things on your credit report that are in dispute, DU does not pick up on those disputed items. Therefore, it will override those. But an underwriter will look at those disputed items to help determine risk. And so that's where I come into play, to look at your credit report, make sure we analyze it, and go through it with a fine-tooth comb to ensure the integrity of the DU findings. Because anytime DU is run or LP is run, it's only as good as what's input into it. So, and very important, you have somebody like myself who understands that and will not just spit it out like a paper machine or something like that. That they're really going to take the time and analyze your credit report and go over it with you. So
absolutely. And Jason, you explain, buyers. Jason explains everything to you guys. I mean, he'll explain the whole process. I know this is probably sounding like, Chinese to you right now, but he can explain all of that with you when you sit down with him, and he'll go through the process and tell you exactly what you need to do to get qualified to buy. And then you meet with me, and then we go through the real estate process at that point. But we are always in communication. The lender and I are always in communication. I need to be in communication with you to know what's going on with the loan, the file, how the underwriting process is up until the closing date.
Absolutely. So, yeah, that's this in a nutshell. This is the one thing you folks need to have before you go out there and look at property. You have to have this. Don't fool yourself and put yourself out there and start looking at properties, get excited about something, and then not have this, because you're not going to be able to put an offer on a house. Maybe on a for sale by owner if you just happen to drive by, or maybe you know the neighbor or something like that. Okay, maybe you can get away with it then. But for 99.9% of the transactions that happen here in Arizona, no way. No realtor is going to take you out. Nobody's going to take you serious until you have that pre-approval form or pre-qualification.
So, and when a realtor doesn't respond to you, I mean, there could be various reasons, but partially if they're sending you houses and you want to look at houses and you have not provided pre-approval to that lender, to the realtor, chances are it's because in their eyes, you may not be a serious buyer. And, it just costs frustration and a waste of time. So please provide the pre-qualification letter to us so that we can do the next step for you, help you with the next step.
Absolutely. Absolutely. If you're serious about buying real estate, then get a pre-qualification, period.
You must have that.
Yeah, you're not serious about real estate. Right. Absolutely. Okay, well, that's pretty much it. That's what we wanted to cover today. We felt it was very important for you. Hopefully you got some information out of it, a little bit more as to what I'm going to be looking at and how I evaluate things to ensure a successful transaction for you. So that's what we're here to do, is set you up for success, not set you up for failure. Exactly. Nobody wants to do that. So it's all about taking the time up front to prepare. What is it? Not KISS, but what's the 5 Ps? Preparation prevents piss poor performance.
Exactly. That's right.
So those are the 5 Ps. I learned that when I was in the Marine Corps, by the way. So you want to be prepared. So get out there and get your pre-qualification. Call me today. Email the show at valleyofthesunrealestateshow@gmail.com or call me directly at 602-573-3101. Look me up on Twitter. Jayson, Jayson Bates is my Twitter handle. Or you can Google Plus me. I've got plenty of friends and stuff on Google Plus. You can look up Valley of the Sun Real Estate Show, iTunes, Stitcher, however you hear us. I really appreciate you listening to what we have to say and hope you get out of it as much as we put into it.
Thank you so much for having me, Jayson.
Yeah, no, thanks for being a part of it, Awni. I really enjoy your input and your perspective on things. It really, I believe, helps the consumer out there from a real estate perspective. So I really
Thank you. I'm always around, so if you guys have any real estate questions or concerns, feel free to contact me.
Yeah, call Awni and his team. He's got a great team. They're there to help you. They do a fantastic job. They really know the market. So please reach out to Awni and his team. They'll be more than happy to help you with any of your real estate needs. All right, well, until next time, thank you once again for listening to this show and downloading it. And until next time, stay in touch. And I look forward to hearing from you soon. Take care. Bye-bye.